Let's take a look at a bank reconciliation example. Hawthorne Manufacturing Company has a checking account at First Pacific Bank. The bank provides the bank statement, and we have the following information. Okay, so this is the first time that the company is seeing some items such as service charges, NSF checks, and the note that was collected directly by the bank, including the interest. Company, of course, knows about its deposits. Each time you make a deposit, you update your cash account on the books. Each time a check gets processed, you can see that and update your books. The general ledger cash account has a balance of $35,276. That's going to be part of our starting point. We're going to do our bank reconciliation. We're going to start with the bank balance, $34,680 on one side, and the cash account balance of $35,276 on the other side. So let's start setting this up. This is as of May 31st, 2024. Have bank statement balance, $34,680. We have the company's cash balance or book balance, $35,276. All right, let's see. What do we need to adjust on the bank statement side? Cash receipts that were not yet deposited. So they weren't deposited in the bank. So $29.65 is not reflected in the bank statement balance. But these are cash that was received, so we can assume that it's included in the book. A journal. When you receive cash, what do? First thing you do is you update your bank statement, your checkbook, the check register to make sure you can update your books. Company, as soon as they receive the cash, record that journal entry. But it hasn't cleared the bank, so we need to add these cash receipts not cleared. Cash not yet deposited. And we can consider this a deposit in transit because it will soon be deposited. All right, what else happened? A deposit of $10.20 was made on May 31st, last day of the month. It was not credited to the company's bank account until June. So every time we make a deposit, we then update our accounting records. We record that journal entry. You and I would update our check register, but it hasn't cleared the bank yet. So let's add that in. This would be considered a deposit in transit, $1,020. All checks written in April have been processed by the bank. Great. Checks written in May that have not been processed yet by the bank are $5,536. All right, well, what do you do when you write out a check? You write out the check, then you immediately update the check register. Company writes out the check and then immediately records the journal entry. But these are not included on the bank statement balance. They will be perhaps tomorrow or the next day, but we need to subtract out these outstanding checks because they are about to clear in the near future. So we don't really have this money. And then a check written for $17.90 was incorrectly recorded by the company. All right, so when I say that the error was made by the company, this needs to be updated on the cash balance side or the book balance side, not on the bank statement side. So when I total these up, we get the adjusted cash balance or the true cash balance of $33,129. I better come to that same number when I finished adjusting the cash balance side. All right, so what does the accountant need to know? From here, we see the service charges were $80. Let's subtract out the service charges. This is the first time we're aware of exactly what they were. We have NSF, non-sufficient funds checks, of $2,187. So we thought we got the cash when we got the check from the customer. Turns out we didn't. When we looked at the bank statement, we see, oh, those never cleared. We need to then call the customer and tell them and charge them. But for now, subtract out $2,187. We also learned from the bank statement that we have a collection note payment collected by the bank. So the customer paid directly to the bank of $1,120. So let's add that. We're just learning about that now. That's it. So our adjusted cash balance works out to be 33,129, just what I was hoping it would be. So these numbers agree, so I'm happy. But one last thing that we need to do, we need to record the journal entries. So the accountant looks at the bank statement and finds out about these service charges, the non-sufficient funds checks, and the note. And so this needs to be recorded as journal entries so that we can actually update the books, not just see that the numbers agree. All right. So one, we have bank service charges. The company collected 80, or the company had to pay out $80. Here's our entry number 1. So we're going to debit some sort of an expense, bank fee expense for 80 and credit cash for 80. Now our books are updated. 2, we have these non-sufficient funds checks. So what we need to do is, oh, we didn't do the error. We didn't account for the error. Sorry. One more thing. Item 4, a check written for $1,790 that was incorrectly recorded by the company as a $790 disbursement. So we wrote it as $790. It should have been $1,790. So we need to add in one more adjustment, subtract out the error. We need to make a bigger payment of $1,000. And because I cheated and looked at my notes for that total, the total's not going to change. Okay, sorry about that. Item 2 is our non-sufficient funds checks. So what do we need to do? We need to record a credit to cash. We didn't have as much cash as we thought we would for 2187. And then what account do we debit? Well, when we first got the check, we recorded a debit to cash and probably a reduction to accounts receivable because our customer paid us. So now let's put that accounts receivable back on the books, and we're going to then soon, we're going to call that customer and tell them we need our money. Okay, the note collected by the bank, we need a journal entry for that. Note collected by the bank, company got cash, 1,120. We take off the note receivable for 1,000, and we record portion of it was for interest. So we record interest revenue for the 120. And finally, the journal entry for this error. To correct that error, we had written out a check for $790. So when we did that, we paid out cash of $790, and we probably took off an account payable when we paid that $790. We made our check. We probably had some bill outstanding, and that should have been for $1790. So let's decrease with a debit, decrease accounts payable for 1,000, and let's credit cash for 1,000 to fix that error.